Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting here on the monthly time frame, what we can see is that the market at the moment is rejecting a quite strong historical structure level. This zone was in fact already acting as resistance here, again here preceding all these two rejections to the downside, and at the moment we can see how we had another test of this zone. The market already started rejecting it to the downside, and we could expect more bearish price action to be developed away from the area. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, first of all, we have to identify the patterns of this market. From here, we had a massive impulse to the upside, showing how buyers were in control during this move, printing only green candles. After that, however, the market started creating this ascending channel. And if we want to draw it to be more precise, we simply have to take these two trend lines, and it's very easy to see how essentially after this massive impulse to the upside, clearly the market started creating an exhaustion pattern in the form of this ascending channel. Now, why is an ascending channel an exhaustion pattern? Because it shows how while before buyers were clearly in control, from here, every time that the market creates a new higher high, new sellers come into the market, meaning that this is an exhaustion pattern after which you could expect bearish price action to be developed, which is in fact exactly what the market did. In creating this move to the downside, however, the market also created this M pattern, and in general, after the creation of an M pattern, what you would expect is for the market to complete the M pattern at the neckline and then create more bearish continuation. That is exactly what the market is doing. We just had the completion of the M pattern at the neckline as we wanted to see, and from here we could expect more potential bearish continuation. Now, we must also notice how the neckline of the M pattern itself is simply previous weekly support from which this rejection to the upside was created, which is now turned resistance. So the weekly time frame is currently testing previous support and resistance, and we could expect more bearish continuation away from the area. Going down on the daily time frame, what do we see? Now, here on the daily, first of all, I did speak about gold quite a few times in the past. I spoke about gold when we were here. I explained all the reasons for which we could expect this rejection to the upside. Then we had this move to the downside. From here, I explained why we could expect the creation of a higher high, a correction, the creation of a higher high, and then a rejection to the downside. And that is exactly what the market provided. And in the very last analysis, I explained why from here we could expect this rejection to the upside, completing that weekly M pattern as I have previously explained on the weekly time frame just now. And by the way, I will link in description all those previous analysis so you can go and check them out for more free education. Now, at the moment, before we continue with our analysis from a technical perspective here on the daily time frame, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. Now, if we look at here at the net positions, what we can notice is that we went from having 195k net positions all the way down to 160k net positions. This shows how the net positioning is currently getting decreased. So clearly we can see how from an institutional perspective, we're seeing a shift to the bearish side of gold with a lot of longs getting closed. We went from 266K longs all the way down to 236K longs from an institutional perspective. So essentially we had 30,000 longs closed on the institutional side of the market, and shorts are getting increased. We went from 66K shorts to 75K shorts. So clearly institutions are adding shorts and closing longs. Now, this makes gold weaker, meaning that we could expect more potential bearish continuation. So speaking about here the technicals that we have from a daily perspective, it is quite clear how at this level we have previous daily support preceding the creation of this green candle here, which is now turned resistance. As the market is testing this previous support to resistance and finding resistance at this zone, in fact, we can see how the market seems like it is not managing to break above the area. We could expect bearish continuation to be printed away from this resistance area, since the market is currently failing to break it to the upside, meaning that institutions inside of this zone might be adding more shorts and closing longs as they have been already doing for quite some time. So there is the possibility for some bearish price action to be printed away from this zone. So how we could be approaching this potential move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries at that point, we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard after you joined the mentorship program, you can get a full refund credited back into your trading account if essentially you move your trading there. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, you can join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description of the video. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.